Welcome back. The NASDAQ is lagging this morning, falling after results from Amazon and Apple last night. Amazon in particular dragging the index lower after weaker profit guidance. NVIDIA is the final Magnificent Seven name to report coming later this month. This calls for Dan Ives, Wedbush Securities global head of tech research, to talk through all of it in a new outfit. Dan, it's good to see you.
Great to be here.
So what happened with Amazon?
I mean, look, I view it as an overreaction. I mean, to me, if you look at AWS, strong. You look at ultimately guidance. I mean, guidance from a top-line perspective, I view as pretty robust. I mean, I actually believe this is sort of the renaissance of growth that's about to happen at Amazon. I think, look, you're just seeing investors hypersensitive, but you look at overall big tech earnings, monster results from the Scotty Scheffler of tech, Microsoft. You look at what we saw from Meta. And even when you look at Apple, I mean, I think there's a big
although the market response to, at least not Meta, but the other three, I mean, Apple's down.
Mm-hmm.
Obviously, Amazon, the worries about the guidance, 17.5% growth at AWS, but far less growth than Azure, for example. Microsoft shares did not perform particularly well either after a very strong quarter. Yeah. Concerning to you?
I mean, to me, I think it's just the beginning. I mean, look, we think Microsoft's going to be a $5 trillion market cap in 2026. And then when I look at what Nadella is doing in terms of the cloud strategy, I mean, those are Azure numbers that were beyond bull case. And I think ultimately investors, they're going to continue to try to find negatives here. But when you think about the big tech growth story and the AI revolution, I mean, this is just the next phase of growth that's now going to the second, third, fourth derivative. Apple being in another category, because right now they're essentially on a park bench drinking lemonade, watching the AI revolution go forward.
Yeah, is that why the stock? I mean, that said, they're also not spending the money that their so-called competitors are at all. They're nowhere near that on capex. But the stock down. Now, granted, we've been talking about the macro reasons today. But you would have expected, with 13% growth of iPhone sales, that the stock would be up.
Look, it was a robust quarter. I mean, you look at the demand bounce back that we saw in China, 4% growth. iPhone demand that's actually going to show growth into the next few quarters. But the elephant in the room is AI. Because the reality is, like, if you look at WWDC where we were, that was a back to the future, right? In other words, like, they're years behind. Investors want to see them now change the status quo. They're on the treadmill. We've talked about it. Kramer's talked about it. I mean, Perplexity is the no-brainer deal. Because the reality is they're not going to have AI innovation that's going to come internally at Apple Park.
You think the market would applaud that?
I believe that would be not just a game changer. I think it would change the trajectory for Cook and Cupertino, because right now, this is the biggest tech trend in the last 40, 50 years. And when you look at what we're seeing with this arms race, from Meta to Microsoft to Palantir, and of course led by Godfather of AI, Jensen, NVIDIA, we're seeing the use cases. We're seeing an enterprise. And for Apple, you can't be on the outside looking in, and that's why I believe clock struck midnight. It's time for them to actually change.
You've always liked it.
Cook kind of, Jim Cramer spoke to him. I don't know if you saw it. We highlighted it earlier on the show. I mean, his language did seem to change a bit around M&A.
Yeah, I think there is a look, and as we've talked about, I mean, besides Beats, and you've talked about it.
Beats is the largest deal they ever did, $3 billion.
Yeah. Exactly. But now they need to change because they recognize that the innovation's not going to happen internally, and their hands are tied too when it comes to DOJ and what they could do with Google and some of the other partnerships. I believe they're going to have to do not just one but multiple deals. And that's our view. But I think if you take a step back in big tech earnings, and obviously a down day today, you feel more bullish about going into the rest of the year, which is why we believe we're going to be looking at NASDAQ 22, 23,000, and into next year, another 10 to 15%.
You feel more bullish. Yeah.
I feel more bullish because of the underlying growth in the AI revolution.
All right, Dan, thank you.